In this video, we learn how to identify, draw, and trade supply and demand zones, and it's super simple once you know how to do it. So when we pull up a chart, the first thing we want to do is look for outlier candles. Those are the largest candles that we can see on our price charts, and they should be much larger than our typical candle that we usually see. So when we look at this chart, a few stand out. We have some here, here, and one here. Those candles are much larger than our typical price candles, so they are a very good starting point when it comes to identifying supply and demand zones. Another thing that you want to be mindful of is that you want to look for supply and demand zones at the beginning, so at the origin of new trend moves. Here is a perfect example. This large candle exists right at the beginning of this new trending move. Here as well, we have large candles and they exist at the beginning of this bullish move. When it comes to drawing supply and demand zones, there's just one simple rule. We want to look at the candle prior to the big explosive candles. So here is one small candle that precedes this large bearish candle. So this can be our first supply zone. And when we look left, we see one large candle here, and the small candle prior to this large candle is our demand zone. And then when we look at this candle, which is also quite large, we can draw a demand zone around here. And those are our supply and demand zones. It's really as simple as that when it comes to identifying and drawing those zones. And the three principles that we follow are, let me repeat once again, a large candle at the beginning of a new trend, and then prior to the large candle, we want to look for small consolidation candles. That's really it. What we then do is we just expand our zones to the right so that we can then observe when the price is coming back to the zone the next time. So after we draw this demand zone here and here, we wait for the price to get back to this zone as the market did here. One thing that a lot of traders get wrong when it comes to supply and demand zone trading is that they want to trade as soon as the price is hitting the zone, but this is wrong. You want to wait until the price is hitting the zone, and then you want to observe the price action. Not always will those zones hold, and sometimes the price will just travel through the zone. And if you trade those blindly, you will enter a losing trade that is very avoidable. So what we do instead is we want to observe the price action, and we want to find patterns that will help us then with our trade timing. So as the market is entering this demand zone, we see that the price is slowing down. Whereas previously the price was falling quite fast, as soon as the market is hitting the zone, we are entering a sideways consolidation. We also have very good defined resistance. So here's a resistance and here's a resistance, and we can use that for our breakout trading. So if the price is getting above this, maybe a breakout or a break and retest, that's where we want to trade. We want to trade away into the upside from a demand zone, and if the price is getting to the supply zone, we want to trade to the downside. Those are the principles. So as we're observing the price here, we want to wait for the price to break out, and that's then our entry signal. We see that the price is struggling a little bit, and now it's pulling away. So prior to the actual candle that is pulling away, we have a lot of break and retest candles here. But what you want to see is a strong candle pulling away from the zone. That's then our entry price and our entry point. You don't just want to see the price crawl above a level, but you want to see strong momentum come back into the market, and that's then our entry price. We see that the price is moving higher very nicely away from the demand zone, and now here we have our supply zone waiting. The price is dipping into the supply zone, or very, very briefly just touching it, and that is good enough. We don't need to see the price get all the way into it, but now we can start defining the price action that we see. For now, we still see that the price is making higher highs. However, if you add an RSI, this is going to be a divergence on your indicator. We also have a resistance area that is turning now into a support, which is very helpful for our later trading. We see now that the price is pulling away to the downside. Momentum on the bearish side is coming back into the market, and this is then our signal to short. We have confirmation that the supply area is holding very nicely. We see now that the price is making a lower high. We have broken this support and resistance area, and that's then our clue to go short. We have a retest at the area. So if you are not a breakout trader, you get a retest here. The price isn't moving down very quickly, but it is moving down. So you might need a lot of patience for this one, but it's looking quite good for this execution as well. Now going forward, we can see that we have other large candles building here. So here we can see we have two large bearish candles, and here as well a lot of bearish momentum coming into the market. This is technically not at the beginning of a new trend, but as we see, the market is really giving us here very, very large candles. So what we could do is draw a supply zone around this. This is a little bit more advanced. In the beginning, I would recommend that you stick to the very obvious supply and demand zones that exist at origins of new trends instead of going for those zones that are in the middle of a trend. But as you gain more experience, you will start to see them more often. You can enter those in your journal to observe how the price is playing out around them, and then start trading those as well. Fast forward, and we want to wait if the price is getting into the zone. By the way, the price would have reached this zone as well by now, and this could have given you another opportunity. Another thing that you can do is also from the 1 hour where you see the zones, go to a lower time frame, such as the 15-minute. Here we find the exact same pattern. We have a support that turns into a resistance. The market is breaking out, pulling away, almost retesting it, and then shooting higher. So another very interesting trade study here, but we want to observe to see how the price is getting here. So we see that the price is reaching into the zone, and now this is way too early. As you can see, there's still bullish momentum in this market. We don't want to go in there yet. We need to see signs that the bears are taking over. So we do have some level here. If we go to a 15-minute chart, we can see a head and shoulders pattern, the left shoulder, the head, the right shoulder. Our neckline could even be here. So depending on how you draw it, you have now a entry candle. Again, we want to really wait for those tipping point candles where the market is showing momentum into the direction that you want to trade. We have our supply zone here. We know that we want to trade short away from a supply zone, but as always, as the other examples, we want to see strong momentum come into the market before we initiate a trade. And waiting for those momentum candles, breaking structures is really important for your trade selection. So this could have been another entry candle, and we could have traded this as well. The market is moving back into the previous low, so another really interesting example here. I also just released a new free ebook which you can download right away. You can go to the link in the video description or in the comments, and then you can download the ebook which contains 22 new trading strategies. There are dozens and dozens of screenshots waiting for you, detailed explanations for the best trading strategies that you can apply to all the markets and all the time frames. When we look at this chart, looking for large candles is super simple. And this is what and how supply and demand zone trading actually should be. It should be very simple and should be very obvious. So when it comes to looking for large candles, we see some here and we see some here, right? So there is a big trend starting after the breakout here. So drawing our zones could be done here at the beginning of this big push. We might have a smaller zone here. And for the aggressive traders, this is the actual origin of all of this big trend sequence. So we can also draw them here. This one, we would have a small candle here, might be a valid option, but as you can see, as the price is approaching this demand zone here, there's no sign of the market slowing down. And that's what I mean with not trading it blindly. You need to wait for actual confirmation at the zone, and that is so important for your supply and demand trading. All we need to do now is just wait for the price to get to those zones, and we're going to observe carefully how the price is reacting. I've just fast forwarded a little bit, and you can see the market is hitting this first zone and actually got us a really good signal. So what we have here is a fake out. So we have a resistance here. The market poked above the resistance and then reversed very, very strongly to the downside, starting a new trend. Granted, it's not a huge trend, but definitely it's a very good bearish reaction. We see that in the next zone, the price moved into this as well, paused, reversed lower, not a very strong reaction. And then we are reaching here the third zone. We see that we have a lot of noise here, right? We have here higher lows. The market is pushing through this support, retesting it, moving lower, retesting it a second time, and then the new downtrend is starting. So those are a lot of interesting variations of how supply and demand zones can play out. You will see that no two charts will look the same. No two setups will play out the same way. You will see different patterns building at supply and demand areas, fake outs, head and shoulders, just V tops and V bottoms, which are harder to trade. Sometimes you will see short reactions like here. Sometimes you will see larger reactions. Sometimes you will see a messy reaction. But as you will gain more experience, you will start seeing patterns. You will start building a catalog of reactions. And that's how you can then build a trading book around your supply and demand zones.